The market's fragile balance, a week of contrasts and uncertainty. The financial world is a complex tapestry, and the week of October 20th, 2025, showcased its intricate weave of triumphs and tribulations. As global markets navigated a landscape of easing U.S.-China trade tensions and a weakening Australian labor market, a deeper undercurrent of credit market stress emerged, leaving investors on edge. But here's where it gets intriguing. While U.S. equities rebounded on robust earnings, Asian stocks faced volatility, and Bitcoin tested critical support levels, hinting at a broader narrative of risk and resilience. Credit market cracks, a cautionary tale. The week began with a stark reminder of the financial system's vulnerabilities. Bankruptcies of automotive finance provider Tricolor and auto parts manufacturer First Brands sent shockwaves through the credit market, impacting major institutions like J.P. Morgan and Jefferies. Regional banks Zions and Western Alliance disclosed non-performing loans linked to a California commercial real estate firm's insolvency, further exacerbating concerns. This risk aversion led to a compression of U.S. two-year Treasury yields to 3.42%, the lowest since May 2022, while gold briefly surpassed $4,300. And this is the part most people miss. The proliferation of private credit assets and the increasing exposure of U.S. banks to non-bank financial institutions have become a growing source of investor anxiety, reminiscent of the 2023 regional banking crisis triggered by Silicon Valley Bank's collapse. U.S.-China trade, a delicate dance. Amidst this credit market turmoil, U.S.-China trade relations showed signs of improvement. Recent escalations over rare earth export controls, proposed 100% tariff increases, and cooking oil trade restrictions seemed to be easing. U.S. Treasury Secretary Bessent's meeting with Chinese Vice Premier He in Malaysia laid the groundwork for dialogue between the two presidents at the Asia-Pacific Economic Cooperation Summit in South Korea. However, the question remains, can this fragile detente withstand the pressures of global economic uncertainty? Controversial interpretation. Some analysts argue that the easing of trade tensions is merely a temporary reprieve, with deeper structural issues between the two economic giants yet to be resolved. What do you think? Is this a genuine step towards cooperation, or a fleeting moment of calm before the storm? Global markets in focus, a tale of resilience and volatility. As the credit market saga unfolded, global markets presented a mixed picture. U.S. equities demonstrated remarkable resilience, with major indices recovering swiftly from the previous week's decline. The S&P 500, Dow Jones Industrial Average, and Nasdaq 100 all posted gains, driven by opportunistic buying and encouraging corporate earnings. Financial sector earnings, in particular, exceeded expectations, with Goldman Sachs and Citigroup reporting impressive growth in earnings per share. Yet, cautionary signals emerged, as J.P. Morgan's $170 million charge-off related to Tricolor highlighted the risks associated with wholesale lending exposure. In contrast, the Hang Seng Index experienced its weakest weekly performance since April, retreating 4.0% amidst southbound capital flows and sector rotation. The escalation in U.S.-China trade disputes catalyzed a sell-off, with investors securing profits from growth-oriented equities in biotechnology and artificial intelligence sectors. Tencent and Alibaba, two index heavyweights, declined 7%, while buying interest concentrated in undervalued state-owned enterprises offering attractive dividend yields. Bitcoin's critical juncture, a test of support. The cryptocurrency market, too, faced headwinds, with Bitcoin experiencing downward pressure as market volatility intensified and risk appetite diminished. A record-breaking $19 billion in cryptocurrency liquidations on October 11th underscored the market's fragility. Sentiment towards Bitcoin remains subdued, with net outflows of $1.2 billion from exchange-traded funds. Technical analysis revealed Bitcoin maintaining a crucial support level near $107,000, coinciding with the 200-day moving average. The question on everyone's mind, will Bitcoin hold this support, Or is a substantial correction towards $100,000 on the horizon? Thought-provoking question. As regulatory frameworks for cryptocurrencies continue to evolve, with the Digital Asset Market Clarity Act of 2025 likely postponed to 2026, how will this impact Bitcoin's long-term prospects? Share your thoughts in the comments. The week ahead, a crucial crossroads. As we look to the week ahead, all eyes are on China's economic trajectory and critical inflation data that will shape monetary policy expectations globally. China's third-quarter GDP data, released on Monday, is expected to show a deceleration in growth, intensifying pressure on policymakers to deploy stimulus measures. The Communist Party's fourth plenum of the 20th Central Committee will also be closely watched for signals on strategic priorities, particularly around technology self-sufficiency and domestic consumption stimulus. In the U.S., Delayed Consumer Price Index, CPI data, will be released on Friday, just in time for the Federal Reserve's policy meeting, with markets projecting a 100% probability of a rate cut in October. Any surprises in inflation data could recalibrate expectations. Meanwhile, corporate earnings from technology sector leaders like Netflix and Tesla will provide crucial insights into subscription economy health and electric vehicle demand dynamics. As we navigate this complex and ever-changing financial landscape, one thing is clear. The week of October 20th, 2025 has set the stage for a pivotal period in global markets. Will the fragile balance between risk and resilience hold, or will new challenges emerge to test the system's limits? Only time will tell. What are your predictions for the week ahead? Share your thoughts and join the conversation.